What if I told you there's a company that once had millions of people using its app every single month? It went public in one of the biggest hype deals of its time, and today you can buy a share of it for less than the price of a cup of coffee. Stick around, because by the end of this video, I'm going to reveal exactly which stock this is, and trust me, the story behind it is wild. Hey everyone, welcome back. On this channel, we dig into real penny stocks trading under $1 in the US market, and we break down their stories in plain, simple English. No confusing jargon, just facts. Today's stock has one of the most interesting rise and fall stories I've covered in a while, so don't skip ahead. The history actually matters here, because it tells you exactly why this stock is where it is today. Let's go back to 2008. A small startup is founded with a simple idea: help people find local businesses in a brand new, fast-growing industry. Over the next few years, this company builds an app that becomes incredibly popular, almost like the Yelp of its space. Millions of people start using it every month to search, browse, and discover products near them. Now here's where it gets interesting. By 2021, this company is one of the hottest names in its industry. Instead of doing a traditional IPO, it goes public through something called a SPAC merger, basically a fast-track way to hit the stock market by merging with an already public shell company. The hype is huge. Investors pile in. The stock soars. But here's the thing about hype. It doesn't always last. Shortly after going public, the entire industry this company operates in hits a massive slowdown. People in the space call it a winter, a period where growth slows down hard, funding dries up, and stock prices across the whole sector get crushed. This company's stock isn't spared. It falls, and it keeps falling, from a high-flying SPAC darling to a stock trading for pennies. Now normally, that would be the end of the story. A lot of companies in this situation just fade away. But here's the twist. And this is the part that's getting attention right now in 2026. This company didn't go bankrupt. It didn't disappear. Instead, it quietly restructured. It cut costs. And in its most recent quarterly report, something interesting happened. The company posted real revenue of over $43 million in a single quarter. And it actually turned a profit, not a loss. An actual net income, with positive earnings before interest, taxes, depreciation, and amortization for multiple quarters in a row. That's rare for a stock trading under $1. Most penny stocks are bleeding cash. This one, on paper, is showing signs of stabilizing. But, and this is important, there's also a twist you need to know before we go further. Around the same time as this earnings news, the company also announced something else, a voluntary move away from its major stock exchange listing, shifting its shares to trade over the counter instead. That's a big deal, because it can affect how easily shares are bought and sold, and it's exactly the kind of detail most hype videos about this stock completely leave out. So we've got a company with a dramatic rise, a brutal fall, signs of a financial turnaround, and a recent exchange listing change all happening at once. Quite the story, right? If you're enjoying this kind of deep dive breakdown, now's a good time to hit that subscribe button, because I cover stocks like this every single week, and you don't want to miss the next one. Alright. You've waited long enough. Let's reveal it. This stock is WM Technology, ticker symbol MAPS. Yes, the company behind Weedmaps, the well-known cannabis marketplace platform. Founded in 2000, went public in 2021 through a SPAC merger with Silver Spike Acquisition Corp. Crashed hard during the broader cannabis industry slowdown, and is now trading under $1 while showing recent signs of profitability. Alongside that recent move to an over-the-counter listing, that's the full picture. Rise, fall, and a complicated present. Make of it what you want, but now you know the real story, not just a headline. Alright, that's today's deep dive. If you found this helpful, smash that like button, subscribe if you're new here, and drop a comment letting me know what other penny stocks you want me to break down next. I read every comment. And quick but important reminder before you go, this video is for educational and informational purposes only. It is not financial advice. Penny stocks, including the one discussed today, are highly volatile and high risk, and you could lose money, including your entire investment. Always do your own research and talk to a licensed financial advisor before making any investment decisions. See you in the next video.